storms like Earl make landfall, they can cause billions of dollars in damage. Forecasters expect this hurricane season to be much more active than last year's. In fact, analysts at Sandler O'Neill say that the storms will cause $9 billion in losses, and the firm covers 35 property insurance companies. Here now with more is Paul Newsome of Sandler O'Neill, and based on Bloomberg data, his calls on the insurance companies he covers are among the most accurate. So we welcome him to the program. Paul, thanks for joining us. The estimate that you say has been thrown around for the cost of Hurricane Earl was $150 million. This is, of course, before the storm weakened. Now that the storm looks to have, the U.S. East Coast looks to have escaped most of the wrath of the storm, that number will likely come down too. Is this rapidly becoming a non-event in terms of what expectations were coming into this storm?
Yeah, it looks like we're going to get lucky that the storm is going to miss any populated areas and be so weak that it won't cause really a significant amount of damage from an insurance company or insurance industry event. But it's still, anything can happen. It always can take a sharp left turn and hit the wrong place. And the $100 million could be a low number, or even it could be a high number or a low number.
Right. You never can tell until after the fact. Talk about the 2010 hurricane season overall, because it's been projected to be more active than last year. Last year was considered to be relatively quiet. What does the fact that last year was quiet mean for insurance companies heading into this year? Are they better positioned financially?
Well, they've accumulated a lot of capital over the year because they didn't have the claims that they paid last year. But on the other hand, from a pricing perspective, I think a lot of companies tend to forget that hurricanes happen, and it's been a very competitive environment. So it's a little bit of a two-edged sword. Profitability is deteriorated on an accident year basis, but they do have more capital, so they're in a better position to pay those claims if they actually happen.
The short-term memory for not just the insurance industry, but for people who need to get insurance for hurricanes, right?
Absolutely. It is remarkable how short-term people's memories are with respect to the damage that these events can happen. A year goes by and the prices will fall and people will buy less insurance as quickly as that.
Talk about the costs associated with a typical hurricane. Not one of the biggest, not one of the smallest. Andrew, for instance, in 1992. And if you could compare that to something like the behemoth that was Katrina.
Well, it really varies a lot, from anything that's $100 million to the big ones. Katrina was probably around 40. Andrew was around 20. Those were the biggest events that we've had from an insurance company perspective. And then we've had a lot in between. A typical hurricane that makes the news that people watch will cost $2, $3, $4 billion from an insurance company perspective, not including economic damages that can be considerably higher.
So when there is damage, can you give us a breakdown between commercial and personal damage? Commercial damage would probably be larger in value, but on a volume basis, personal damage can't be underestimated.
That's exactly right. The most exposed companies tend to be ones that insure homes because they take the brunt of the damage, and a lot of them will be hit in a typical hurricane. So it's the homeowners and the auto insurers that are the ones that are the most exposed.
All right. We thank you for your time. I've been speaking with Paul Newsome. He's an analyst at Sandler O'Neill.